intuition is one of the biggest decision-making characteristics that I utilize. If I feel it, if I like the people involved in it, if I like the partner that I would be involved with, and I feel like there's an ultimate passion from that person to be really great in the business, then that's when we're going to go ahead and try to take this thing to the next level. If I don't have that feeling, we're not even going to dig into the numbers and the books.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 401. When you ask most investors how much passive income they would need to be financially free, the most common answer is $10,000 per month. Well, my guest today is on track to generate a staggering passive income of more than $2 million a month. Kyle Seyboth owns over 300 units, is Wall Street Journal's #1 realtor nationwide, and founder of Century 21 Limitless. Kyle is here today to share his plan to transition from millionaire to billionaire. We'll also discuss how he masters time management through decision reduction. Kyle, welcome to the show.
Hey, Brian, thank you so much for having me. Appreciate the introduction. And I think that was great that you kind of hit on some of those high points of really what I'm looking to do and where I'm at now, where I'm looking to go.
Tell us about yourself. Like, how did you get started investing in real estate? And I also know that you're a realtor as well.
I started out, I'm 40 years old, started around 27, purchased a 4-unit property and was able to purchase this property back when the market was somewhat depressed. Kind of got a feel for what that looked like, right? Always had an appetite, always had really a love for real estate, loved it, enjoyed it. Some of the people that I were around, talked about it at that time. I was out of college, kind of working in finance and started to get the real estate bug in my ear. And I remember the reason I decided to get into that investment side was one of the gentlemen that would hang out with my father all the time would always, when we saw him, he'd always pull out a wad of cash. And I would be fascinated, how does this guy have so much cash? Not coming from someone that had a ton of money or in that situation, how did he have so much cash in his pocket? And, my dad would be like, oh, he owns a ton of real estate. He's loaded. He owns a ton of real estate. And I was like, first of all, I want to be loaded. Second of all, if real estate's the thing to do it, I already have an interest. I need to figure this game out and figure out what he did. So really just started when the market was depressed, bought a 4-unit property. And then from there, got the bug and the understanding really how to maximize and do the BRRRR method. The BRRRR method was what I did from 27 to 40, and what I'll continue to do from 40 to 100. And I think at the end of the day, that's really allowed me to get to the number of units that I have now. And when we talk about the 300 units, 175 to 190 of those are existing units. The remainder are units that I'm in process of developing right now. So the remainder of those units I'm in process will be developed and will be done within the next 12 months. So really changing the focus from the BRRRR, right, of buying properties that needed to be renovated that had a ton of value add, to now focusing on the development side and saying ground up development or repurposing of old buildings or churches or schools or whatever that warehouses. That's the next wave to get me to that number.
What led to that shift in strategy? I mean, the BRRRR method is a very specific method. It was buy, rehab, refinance, repeat, renovate, and repeat. What you're talking about now, ground up development, very different strategy. What led to that shift?
The market led to it. So if you're not paying attention to the market and paying attention to value, right now, the value in certain properties is harder to find, right? There's not as many deals. There's not as many situations where you can actually BRRRR a property. So what I found is you have to go to other avenues to get the unit count to where you need to be. So that true value of buying a property that needs a ton of work or a dilapidated property, that's harder to come by. So what I've done is I've made a massive shift into the development side, which is then it becomes a math equation, right? And I think the math equation that all of us investors already know, it just changes a little bit. And it's how do we reverse engineer into our cap rate, and how do we reverse engineer into the net operating income that we need to use these banks to actually take out the existing debt on the property.
Could you explain that in a little bit more detail, that math equation and using the banks to take out the existing debt? Like dig into that a little bit more, please.
Typically, when you look at a development property or a project, right, you're going to make the acquisition of the land or the current building. And then from there, the banks will typically allow you to leverage, to basically have 30% of your own equity in the project, but they won't move forward and actually allow you to draw down on any of their funds until you've hit in that 30% threshold of equity within the overall project. And that's the overall cost of the project right now, not just the acquisition. So we've had to go and take a strategy of raising equity, right? Raising equity stake from LPs that are going to take up and the majority of that money. So the development side now, right, as the general partner, as the owner, you now look to raise your equity, to have your debt in place for the 70%. And then at the end of the day, similar to Burr, we need to make sure that we can take out the equity holders so that the equity now goes back to me as the owner of the project. So it's basically short-term funding on the equity side, long-term funding on the debt side, and the math equation needs to be there where there's enough potential equity at the end from the cap rate, from the net operating income, and from your overall gross rents to allow you to take out those other positions. Otherwise, the math won't make sense. So it's a total different mindset going in, but it's the same exact result. You still have to add value to the end project, right? Whether it's year 1, year 2, year 3, the value must be there for the bank to take out everyone else.
And when you say take out the LP investors, the limited partner investors, it sounds like you're raising money from investors to do the development deals. But then once the development is completed, you are kind of burring again, refinancing.
Recapitalizing.
Yeah, recapitalizing, using the cash proceeds to basically buy out your investors, pay them back their money plus the profit that was projected. Is that?
And that's twofold. That's one, to allow the investors to have the gunpowder to do more. And it's 2, to allow the equity to come back in my own pocket and allow me to now take on and hold the equity in the properties to make it worthwhile. Otherwise, I've given up a ton of equity there.
Your strategy with your properties is, at the end of the day, you want to be the one who owns them 100%?
Ideally, yeah, unless I have a 50% partner. I try to minimize the allocation to other LPs in the buy and holds process, right? So if it's a buy and hold situation, I really want to minimize how many other partnerships that I have in place. And I want to have that equity. And I think you said it in the beginning, and the goal is, the goal for myself is to become a billionaire, whether that's on paper, whether that's from cash and equity, whatever that looks like. The easier, faster way to get there from a net worth perspective is to have as much equity as possible and to not divide it up over many people as you can. So that's ultimately how that goal kind of aligns.
It sounds like you're developing different types of assets. It's not just multifamily. It can be any other asset class. Can you talk about that a little bit? Like, how are you determining what type of development projects you should build, and where are you building them?
They're actually all multifamily. They're all residential. I like to stay in that space. I try, if I have to go the mixed use route, very, very light business, commercial on the first level, maybe light retail, very basic small business, no anchor tenants for right now, kind of getting started on the development side. So really focus on areas that I know. So the New England region, Rhode Island, Massachusetts, and Connecticut. And I focus on residential. I feel like there's obviously, with the shortage of housing, I feel like not only that, but in the New England area, the housing is very old. And when you have old housing, right, when you have older housing, there's a need for new, there's a desire for new, and there's an attraction to new. So when you can put together a package of new desirable housing, you're going to have more of a draw of your overall tenant base. So at the end of the day, I find that it's a great strategy. I don't think it's going anywhere. And I think the absorption numbers are there to make this work out in the long run.
What size projects are you building?
Anywhere from 8 to 12 in queue. And I don't have the numbers exactly in front of me because we do so many other things. But we have the lowest project would be 15 units. The biggest one that we're working on LOI on right now is 250. So anywhere from 15 to 250.
And how did you put together your team to handle all this? Because the development, construction, a lot of different expertise needed there. How did you put all that together?
I manifested it, if you want me to be honest. I said to myself coming into this year, being a real estate agent, that obviously I've done a very nice job helping people buy and sell real estate. We do about 70 to 100 flip properties a year, which work out really well. Move into this development space. And I said, I need to build a team around me that can run as fast as I run. And that's not going to get bogged down when I continue to do multiple projects. So over time, these folks have come to me, whether it started with a consultant. We hired a consultant on the first project. He did a decent job. And then from there, after hiring the consultant, it allowed me to architects, engineers, general contractors, in-house folks, and we're just keep continuing to grow.
Okay, so you're building the team and growing it. Well, Kyle, if you don't mind, let's reverse engineer that monthly cash flow goal, or that monthly cash flow amount of $2 million that you're shooting for. How do you see yourself getting there? What is the strategy?
So we have all that. We don't guess. We reverse engineer. So I have probably anywhere from 13 to 17 streams of income right now. 13 to 17 streams of income. And the way that we're going to get there, and I can kind of tell you what they are, and then if we want to dig into how much we anticipate from each one, we can get into that. But currently we have an in-house trader. So we do some foreign exchange trading. We have some bot trading, some automated trading that we work on. My real estate sales, I average between 30 and 50 sales a month as a real estate agent. So that's income that comes directly to me. I own a brokerage of 285 agents. So there's income there. We also have a team within the brokerage that has 30 agents that are on a 50-50 split. They split their commissions with us 50-50. We have our development stuff, which on average, every project, there's built in between $1 and $5 million there in net profit for me overall. We have our hard money. We've got a hard money fund that we've raised money in there. We have 40 loans outstanding right now. Flips, we do at least 1 to 2 flips per week. So average between 75 and 100 or 50 and 100 flips per year. We own a legalized mushroom cultivation business where we actually grow mushrooms and we sell them to grocery stores and other companies. We've got an Amazon automation store. We've got a joint venture on title and escrow, a joint venture on a mortgage company. We do tax sales. We do marijuana cultivation, transportation, and manufacturing. And then my rentals, I've got, like I said, 170 to 300 rentals in there. And then I own a franchise of Big Chickens, which is a new franchise here in New England. Shaquille O'Neal is the sponsor and the brander behind it. We've got the rights to the first 24 Big Chickens here in New England. And I have a couple other big projects that we're working on down south in Georgia that should produce significant income. So all those things combined, that's how we get to that $2 million a month.
Well, that is an impressive list. Are you at the nexus of all those things? I mean, are you the primary driver behind them with your team?
I'm the visionary behind all that. All that stuff came from me. All that stuff sits with me. All that stuff gets orchestrated through my knowledge, expertise, and wherewithal.
Let's talk about decision making. Like that's a wide variety of different ways of making money in businesses. How do you decide what fits into your what should fit into your portfolio as opposed to what shouldn't be in your portfolio?
Intuition is one of the biggest decision-making characteristics that I utilize. If I feel it, if I like the people involved in it, if I like the partner that I would be involved with, and I feel like there's an ultimate passion from that person to be really great in the business, then that's when we're going to go ahead and try to take this thing to the next level. If I don't have that feeling, we're not even going to dig into the numbers and the books. So the first thing is feeling. Intuition continues to be the biggest driver for me. I feel I have a good knack for visionary things in the sense of what businesses will perform in the future. I feel I have a good knack for personalities, what personality will clash and what will work out well with myself. And then from there, we start to dig into the actual numbers. And that's where I bring in some of my team to kind of help me out with that.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Let's talk about that intuition. Like, obviously, you've built that up over a lot of experience, a lot of different projects and businesses that you've been part of. What goes into that intuition? Like, what are you looking for? And are there examples of when that intuition has said, no, don't go forward? This is not a good one for you.
Passion, coachability, flexibility, and the ability for that person to be a chameleon on the staffing or on the side of the actual personnel that's going to be involved. On the other side of it is it a tired business? Is it a business in the first inning of growth? Are we in the middle of the baseball game, or are we at the end of the game? And I think when you look at it from those perspectives, where are we in the cycle? And when do we expect to get this thing kind of kick-started, and where will we be at that point in time, factored in with the folks that will be involved? Will those two things be copacetic, and will they be able to work with me? And if we can check all those boxes, it's worth a second pass.
You said the ability to be a chameleon. What does that mean to you?
That's the ability for someone in a leadership role to lead different people and understand how to communicate effectively, understand how to communicate in a way that's not the same within each person they're going to deal with, whether it's a sales role, whether it's a management role, whether it's a leadership role, whether it's a C-level role, whatever role these folks will take on in this new business. Are they able to communicate in a way that will not only be similar, that will be dissimilar to every person they're going to interact with? Are they able to adapt to their environment? Basically, at the end of the day, that's very, very, very important. If they can't adapt to their environment and they only know one trick and they're a one-trick pony, it's hard for us to be successful.
It sounds like you've had a lot of different partners.
I have.
And a lot of people are afraid to partner because they fear the things that can go wrong. So I'm wondering how, and inevitably things do go wrong. How do you address that with your partners? And how do you like to see them react when things go wrong?
Things are always going to go wrong. It's going to happen. It's human nature. It's how do you react to something when it's not going your way? And I think at my end, I take a business approach, a non-emotional approach, a complete approach that is tactical and strategic in nature. And I look for that first sign of problem. How does my partner handle any stress? And if they turn out in a situation where they become very emotional, or they're not able to handle it, or they're not going through it in a way that's not tactical or strategic, then we've got to reassess the overall partnership. So not all partners are bad, but not all partners are good. And it's after time goes on is when you start to figure that out.
You mentioned coachability. Do you find yourself coaching your partners as you go along when these things do happen?
I do, because a majority of them have a passion and a skill, but they don't have the business acumen. So when you have a passion and a skill, it can get you so far. When you don't have the acumen that you need to actually run a business and take it from A to Z, that's when they need the coachability.
I want to talk about what I mentioned in the intro, which is your time management system through decision reduction. I'm really curious as to what that means and how you put that into effect.
Decisions are meant to be made in a fast, concise manner after you have the facts and the information. If you cannot make a decision one way or another in a fast, concise, determined, stern, confident manner, then you should either punt the position or you should push it to a later date. Because at that point, time management becomes crucial. You either need to make a decision and move on one way or another, or you need to punt it till you have more information. The problem a lot of people face is they can't make a decision. They're indecisive. They worry, what if I make the wrong decision? And you know what I say to that? Unless I'm dead, I can fix it. So as long as I don't die, I can figure out how to solve the problem of a decision that may not have been the correct decision at the time, but I need to make one. And once I make one, then from there, let's figure out let's let the chips fall where they may.
Can you give us an example of what you just said, like a real life example from your experience?
I'll give you an example of a development deal. So I was presented with a development deal in one of the better pockets of Rhode Island. And it pushed, acquisition price was $962,000. I would have no access to the building. I would have no access to any environmental. I would have no access to getting construction costs. I had to close in 3 weeks and I had to make a decision that day. So I had to make a decision, do the costs of what could go wrong outweigh the benefit of the overall development if all goes well, not knowing how many units I can put on this property, right? I had to make a very quick decision. What in my mind, in my intuition, was going to be the outcome. And I made the decision to move forward with the project. And it looks like overall it could be a $2 to $3 million equity project at the end of the day that we're going to partake in. So it's a situation where a decision, if I took too much time, that project's gone. Right. So it's making a decision concisely and confidently based on the information in front of you. And that happens day in and day out. And that's one of the more recent ones where I had to make a decision, purchase it with a hard money loan, and then figure out everything after. Let the chips fall where they may and figure it out after.
In the different businesses that you have with the different partners, do you find yourself pushing them to make those decisions using that same matrix that you just shared?
I find a lot of them struggle and they look for me to make a decision and become the decision maker. And that's okay. I think that's what I'm there for. I'm there to help them push these things over the finish line. They can get it there and they can push. But to get it over the line is where I come in, and that's my value add.
You're getting to that $2 million in cash flow each month. But when you look out 5-10 years, what does your business look like? What does your place in that business look like?
So I've said by 45, my goal is to be almost a maestro of a conglomerate, a mini GE that we've built from the ground up, that operates at a super high level, that has an extreme enterprise value, that many folks would look at and say, hey, I'd love to be part of that organization in any one of the 13 or 17 businesses that they have. And myself really being the visionary that's taken it from the ground up and allowed it to continue to grow, and really provided a ton of value to all the managers within each different division, and been able to continue to grow at a high level and be in a position where the $2 million a month at that time seems trivial, and we're doing even better than that, and we're road to a billionaire, and continue to grow and give back and help other people prosper in ways they never thought was possible. So really just continue to grow at a stratospheric rate and get to that point where a lot of people said it's not possible. And my belief is anything is possible.
Can you share with our audience some of your favorite hacks or apps?
I would say my favorite hack that I do every day is every single day I write down 10 things that I'm grateful for. Every single day I write down, I am a billionaire 10 times. Every single day I say to myself, I'm happy and grateful that I'm making in excess of $2 million per month from passive income in a calm, confident manner. I'm happy and grateful that I have a great life with my kids and my significant other and all live in harmony. I say those things 10 times. And then I also write down that I have by the end of 2023, I have obtained a $200 million line of credit for real estate development, real estate deals, and agriculture.
How would people find out more about you or get a hold of you?
Guys, if you want to get a hold of me, go on my Facebook, social media. Just type in Kyle Seyboth, KYLESEYBOTH. I love this stuff. I love helping people. We're always looking for deals. If you have a deal, you want to run a deal by me, you want to get in front of me, you want to talk to me, I'm always on the road, do a lot of these podcasts, and I appreciate, Brian, you having me on.
Kyle, this has been an exceptional conversation. I really enjoyed talking with you. I love your drive, your passion, and I really appreciate that you shared a lot of your techniques with our audience today. Thank you so much for having this conversation.
You guys have a good day. Thank you all.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's HIGinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.